If you're unsure what programs are available through the SBA for loans to businesses, you're not alone. But I thought in this video, I want to go over the various programs, the terms and the stipulations, and what are the uses of each one of the programs. For sake of not making this a 2-hour long video, I'm going to focus on just 3 of the major programs that are offered through most banks or other SBA lenders. Welcome back to my channel, Mystery of Money, where I cover all sorts of topics that surround money. As a reminder, there's still these cups that are up for grabs. I'm going to run the contest through the second week of December, or next week, so that way there's enough time to be able to get them out by Christmas, or whatever holiday you choose to celebrate. There's no purchase necessary, and all you need to do to enter is head over to my website and submit by email, or simply just comment below. But enough about that, let's get into the video. Over the years, I've done many of these programs, and while some of the conditions and terms have changed over the years, a lot of them remain the same. With any of these programs, if you are a startup business, you are going to be required to write a business plan. Now, December is the National Business Plan Month, and you can either go to a local small business development center, and I'll put a link below where you can find out where your local one is. They will be able to help you write a business plan. They're not going to write it for you, but they can assist you in writing it. You can download a template below, or you can sign up for my course where I walk you through the entire process. But just know going forward into any kind of startup business or a business that hasn't been around for a few years, you're going to need a business plan. The number one program that most people are aware of is the 7A program. This has a maximum loan amount of $5 million. It provides an 85% guarantee of loans $150,000 or less, a 75% guarantee for loans that are greater than $150,000. And there's up to a $3.75 million guarantee based on a $5 million loan cap. The guarantee actually means very little for the borrower. All the guarantee means is if the fact that the loan goes bad, you stop paying the loan, your business goes out of business, whatever the case may be, the bank is going to come in, they're going to liquidate all of your assets, and if there's not enough to cover the amount of the loan, the SBA will step in and reimburse the bank that 75 or 85%. If you want to know more about what the SBA takes as collateral, I'll post this video here. The guarantee is mostly important because it gives the bank confidence that they will recoup the money when they take on a risky investment. Basically, a startup business is inherently risky. In most situations, the bank has the ultimate judgment call on whether a loan needs an SBA guarantee. Typically, if a business has not been established for longer than 2 years, if it's in a risky industry, or it has a lack of collateral, this is why the SBA guarantee is needed. Any of the programs under the SBA will carry some form of guarantee. Now let's talk about the use of proceeds for this type of loan. You can use these proceeds for expansion, renovation, new construction, to purchase land or buildings, to purchase equipment, fixtures, leasehold improvements, debt for compelling reasons like your interest rate's too high or the term's too short, seasonal lines of credit, inventory, or just starting a business. The 7A program is a basic catch-all for lending when it comes to financing. Pretty much anything that you would need for your business will be classified into one of the buckets that I mentioned before. As for the maturity or the length of loan, this is going to be dependent on your ability to repay. For machinery and or equipment, they're not going to extend past the expected useful life. So those terms are typically 5 to 10 years. If you were to look at real estate, that can be done up to 25 years. Obviously, the longer you take out a term loan, the better it is on your cash flow. But again, they're not going to exceed that useful life. So let's get into the maximum interest rates that banks can charge. Now, this is the maximum interest rate the day it is originated. Because most of these loans are going to be a floating rate or tied to prime, it will adjust if prime goes up or down. Loans under 7 years, if the amount is $0 to $25,000, the maximum that they can charge is prime plus 3.25%. This is going to give you an effective rate of 7.5%. On loans from $25,001 to $50,000, it's prime plus 3.25, giving you an effective rate of 6.5. And for loans over $50,000, it's prime plus 2.25, giving you an effective rate of 5.5. Now, for loans that are 7 years or longer, again, the same buckets are going to remain 0 to 25, 25 to 50, and over 50. But the spreads increase by 50 basis points or 0.5% each time. So the effective rates for loans over 7 years are going to be 8, 7, and 6. Like I said before, these loans are going to have a fluctuating interest rate, meaning that anytime prime rate changes, and recently prime's been fixed at 3.25%, but with everything going on in the economy, if the Federal Reserve decides to raise interest rates, this is going to affect the prime interest rate. You're going to have to check with your lender or in your note documents to see when your interest rates are going to adjust. You're also going to have guarantee fees with this program, as well as other bank fees. Fortunately, there's no SBA fees for loans under $150,000. That was approved fiscal year 2014, although pre-pandemic, those fees were going to be reinstituted. Again, that's something to talk to your lender when you're going through the process. The fees that are charged on the guaranteed portion of the loans, this is another one that during the pandemic, and I believe that had an expiration of October 1st. I haven't seen additional guidance that came out, but the guaranteed portion from $150,000 to $700,000 is going to equal 3% of the guaranteed portion. How you know what the guaranteed portion is if you take the loan amount times your guarantee, that is the guaranteed portion. This is a one-time fee that is paid at closing, and oftentimes it'll be rolled into your closing costs. As you go up in loan amounts, the fees are going to increase up to a maximum of 3.75% over $1 million. There's also an ongoing fee of 0.52% or 0.5% on loans over $150,000. Most of the time, that fee is going to be rolled into your interest rate and you're not even going to see it. Now, as far as bank fees go, this is a topic that I recently realized when I spoke to another viewer. Banks are allowed to charge a maximum packaging fee of $2,500. Along with this fee, they are allowed to charge any reasonable fee that they would charge another borrower in a similar situation. In essence, they could charge whatever they want as far as origination fees as long as it aligns with what they do on a conventional loan. I've not personally experienced any of this because normally the origination fee on top of a loan packaging fee on top of the guarantee fee is just a lot of fees, and it's hard to get borrowers to really agree to that. But that's not saying that there aren't banks or institutions out there that are going to charge you these fees. So one of your things as due diligence will be to ask up front when you talk to a bank, what are your origination charges? If they're too high, then go to another bank. So now with the terms and conditions of the program, let's talk about who qualifies for the program. Businesses that qualify must be for-profit businesses, and they have to meet SBA sizing standards. This means that you can't have over so many employees or so much in annual revenue. If you're concerned about that at all, you want to check out the SBA's website where you can find the sizing standards. There is a prepayment penalty for loans with maturities over 15 years. If it's repaid within the first 3 years, the breakdown is going to be 5% for the first year, 3% for year 2, and 1% for year 3. So what's the benefit to the borrower for this program? Basically, it's giving you longer-term financing, it improves your cash flow, and it gives you a fixed maturity. There's no balloons or no prepayment on loans under 15 years. Overall, it's a good deal, and the interest rate isn't that out of line with what you would get on a conventional loan given the same circumstances. So let's move on to another program called the Small Loan 7A Program. It's basically the 7A program, but it's for loan amounts under $350,000. All of the rules and terms and the conditions are going to stay the same as with the original 7A program, with the exception of those who qualify. All of the loan applications will be credit scored by the SBA. If it's not an acceptable credit score, then the loan will be submitted to full underwriting with the SBA instead of an express application. So this means that if you have a lower credit score, you're not automatically going to be approved, let's say. They're going to have to do more documentation and more of a process to get it done. So, and then there's the SBA Express loan. This is another one that has a maximum loan of $350,000, but a maximum guaranteed portion of 50%. It has a little bit of changes from the 7A program. Biggest is the maximum term on this 7A Express is going to be 7 years. For revolving lines of credit, including a term out period, this means that overall you can draw on the line, but then they're going to term it out into a